Hey everybody, this is Jim at SP500chart.com coming to you from downtown Manhattan. It is just after the close on April 18th, 2012. Before we get into it, you're looking at the chart we're going to look at mostly, but before we get there, I want to tell you, just as by way of reminder, that nothing in this video or at the website, SP500chart.com, is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research. And you got to make investment decisions that make sense for your personal financial situation. That said, let's take a look at the chart. Well, a couple things happened over the past couple of days, and one of those was we had a really strong day yesterday, and the more I thought about this move that we had on the 17th, the more I think we can thank one stock for that move, really, and that's Apple. I didn't realize just what a large portion of the S&P 500 Apple is. It represents about 3.8% of the S&P 500. So that said, the strength that Apple experienced yesterday alone is almost exactly the amount that that took this the S&P over this little trend line right here. So in other words, what I'm saying is, if you removed Apple from the S&P 500, you could take everything that happened yesterday and subtract about 1.9 points from it. So now that we kind of look at it that way, you can, and you have to consider, of course, that Apple was up, what, something like 5+% yesterday. So as we look at the chart today, kind of what I thought might happen did happen, and that is that move could not be sustained, and we came back to this pattern, and it looks like late in the day we even came up to test this resistance line again. Now, I want to mention something about Apple. It's an interesting stock. It has almost a cult following as a stock, as much as even I don't want to insult anybody here. Apple makes great products, but you know how people get about those products. So, you know, it's one of those stocks to where you just kind of say it might just have a life of its own. But I want to tell you, from a technical charting standpoint, Apple is in a pretty weak position. It broke a rising channel that had been operating since the very first of the year. That happened on Monday. That big up day yesterday, by the way, was essentially a back test. And if you look at what happened today, when it was up a bit, you could look at it and say, well, again, that's just essentially another thrust up to try to get up back into that channel, and it failed. So I don't think Apple is looking that strong. But again, put a little asterisk beside that, because Apple is one of those stocks that just has this kind of interesting dynamic about it. It has almost fallen off of a cliff a number of times, and the herd comes and rescues it. So what I'm looking at now is, first off, we were in this downward channel right here, and when you make a breakdown from a neckline, which is what we did off this triple top back on the 9th, you generally expect there to be a back test, okay? And you know, if the S&P is going to rally and get above this resistance line, I would expect it to find strong resistance here, up just over 1400. But it's also quite possible that as we look at this pattern develop here, and here's the top line, here's the bottom line. As we look at this pattern develop, We have to get to a point to where we start to see that this is either going to act as a reversal or it's going to act as a continuation. And we already have a number of touches on the 2 touches on the bottom line, 1, 2, and that little eking out above the top line yesterday. But the basic gist of it is, I believe this is now a pattern that we need to watch. If we get up over this pattern with conviction, at whatever point that might happen, we would measure the height of the pattern right here at the first reactive move, and we would say that wherever, from whatever point that would break out, let's pretend, let's say that it breaks out in 3 sessions. Well, then you could see very easily how such a breakout on the 23rd could produce a move that would fully backtest this green support line that we broke on the 9th. Additionally, if it breaks down to the downside, first off, if it does that, it may do that even earlier, because we would expect, at least I would expect, this bottom line down here to get tested at least one more time. And if it were to break, then what are we looking at? Well, we measure the distance of it again, and what do we end up with? Well, we end up with a potential pattern. Oops, that was way too... Here we go. We end up with a potential pattern that takes us back to this nearly horizontal support line that has been operating since early February. So this is very interesting where we are right now, and I know that call of up or down is totally ambiguous. But you know, when you're dealing with patterns like this, that's all you can do. You know that there's a propensity that slightly favors this pattern breaking to the downside. And the reason is simply because it formed after a downward move. In general, about 2 out of every three consolidations after any fairly strong move will serve as a continuation pattern. So we're clearly in consolidation. The question is it a continuation, and or is it a reversal? If it is a reversal, then I would expect, you know, maybe if we get up and tag this line here, then there would likely be some more weakness to ensue. But that's about what I've got here from downtown Manhattan. You know, I'm up here in very near the financial capital of the world, and I'll be honest with you, I don't feel that much smarter. Maybe if I hung out here more often. But, you know, you come up here and spend $50 on a cab ride and get to your hotel, and it's about half the size of what a similarly priced hotel would be, you know, in any other major city in the States. But, you know, it's a great place. I love to come up here and visit, and this is work. So, hey, let me hush and let you guys get on to what you need to do. Thanks for watching the video. I really appreciate it. Take care.